Welcome back to Explain the Charts. Today, September 22nd, 2025, we're tackling one of the most talked about stocks, Tesla, ticker symbol Tesla. The buzz around Tesla has been incredible, with recent news pointing to a staggering 28% surge this month alone, pushing its market cap to an impressive $1.42 trillion. Just last week, on September 15th, CEO Elon Musk disclosed a personal $1 billion share purchase, a move widely interpreted by investors as a massive vote of confidence in the company's future. This coincided with Nevada's DMV clearing Tesla to test autonomous vehicles on public roads on September 12th, significantly advancing the robotaxi vision and fueling market excitement. Adding to the bullish sentiment, hopes for further Federal Reserve rate cuts, following their first cut of 2025, have buoyed the broader market, particularly for growth stocks like Tesla. Now, let's turn our attention to the daily chart to see how these events have manifested in price action. Looking at the one-day candles, we can observe a remarkable uptrend originating from around the $320 to $330 range in late August, perfectly aligning with the reported 28% gain this month. Notice the significant volume spikes on September 11th and 12th, directly correlating with the news of rate cut hopes and the Nevada robotaxi approval. The candle on September 15th, closing at $410.04 with high volume, clearly reflects the impact of Elon Musk's substantial share purchase, reinforcing investor belief. Despite some intraday fluctuations, the overall trend from early September to our last recorded daily candle on September 19th, closing at $426.07, shows sustained buying pressure. This strong upward momentum has led to current trading activity, as reported by Google, around $441.30, indicating further gains beyond our latest candle data. Historically, the 52-week high for Tesla stands at $488.54, recorded back in December 2024, an important level to keep in mind as the stock approaches previous peaks. Shifting to the one-hour chart gives us a more granular look at the market behavior during the early part of September's rally. Between September 2nd and September 5th, we can see Tesla consolidating and then making a strong move from the low 330s to the mid-350s, characterized by substantial hourly volumes. This shows the immediate reaction to the underlying bullish news and the accumulation phase before the more pronounced daily moves. The pullbacks within this period, like the one on September 5th from $355 to $346, demonstrate healthy profit-taking and retests of newly established support levels, which is typical during a strong rally. Now, let's narrow our focus to the 15-minute chart to analyze the intricate movements over the past few days, from September 17th to 19th, 2025. Here we can clearly see the intense intraday volatility and the swift reversals that characterize Tesla trading. On September 17th, after opening around $418, the stock experienced a sharp dip to $409.67 before staging a significant recovery, indicating strong buyer intervention at that lower price point, establishing a temporary support. The subsequent surge on September 18th saw the price attempt to break higher, reaching into the $430s, but it was met with resistance, leading to a pullback and testing support around $415.05. This $415 to $417 range proved to be a critical short-term support, with buyers stepping in to prevent a deeper correction. By September 19th, the chart shows renewed upward momentum, with the price consolidating around the $425 to $426 level towards the end of our data, exhibiting a clear ascending channel. The constant battle between buyers and sellers, marked by large transaction volumes on these shorter timeframes, highlights both the speculative interest and the underlying conviction in Tesla's recent narrative. The sheer number of transactions, reaching into the hundreds of thousands for individual 15-minute candles during key price movements, underscores the active trading environment. Returning to the daily chart for our broader outlook, several key price levels emerge for traders and investors to monitor. For short-term bullish continuation, the immediate resistance to watch is the $440 to $445 range, which is around the current Google reported market price. A sustained break above this could pave the way for a retest of the all-time 52-week high of $488.54, with analysts like Piper Sandler setting a target of $500. On the flip side, the critical support level in the short term is $415 to $417, as seen in the recent 15-minute chart action, acting as a buffer against deeper corrections. Should this break, the next significant support lies around the $395 to $400 psychological level, which previously acted as resistance during the early September rally. Further down, the $350 to $360 area represents a stronger, longer-term support zone, having been a battleground multiple times in the past. The reasons to be bullish are compelling: Elon Musk's renewed personal investment, significant progress in the robotaxi vision with regulatory approvals, and Tesla's positioning in the accelerating AI revolution. The broader market's rate cut relief also acts as a tailwind, especially for growth stocks. However, caution is warranted. Wall Street is divided, with a consensus hold and an average price target significantly below current levels, suggesting potential for profit-taking. Intensifying competition from other automakers and potential sales plunges due to Musk's political affiliations are also factors that could turn sentiment bearish. The upcoming shareholder vote on Musk's incentive package on November 6th is a crucial event, as a failure to pass could dampen investor confidence. Additionally, any negative news regarding Q3 or Q4 delivery numbers, or further regulatory hurdles for autonomous driving, could trigger sharp downturns, reinforcing the significant gains can be followed by sharp downturns adage. Conversely, positive updates on Optimus robots or strategic investments in XAI could propel the stock even higher. In summary, Tesla is currently in a strong bullish trend, driven by key fundamental catalysts and positive market sentiment, pushing towards new highs. The immediate critical resistance is $440 to $445, followed by the 52-week high of $488.54. Breaking these could see the stock target $500. Key support levels are $415 to $417, and then $395 to $400. The likelihood of continuing the upward trajectory towards $440 to $450 and retesting $488.54 is moderate to high, especially if the shareholder vote for Musk's package is positive and robotaxi development maintains its pace. Conversely, a pullback to $415 to $417 is moderately likely if profit-taking ensues or if broader market sentiment shifts negative, particularly given the stock's rapid ascent. Traders should closely watch volume during breakouts or breakdowns of these key levels, and keep a keen eye on the November 6th vote and any news regarding Tesla's robotaxi deployment and Q3 earnings reports.